talking about QYLD's ETF, which does covered calls, and I'm going to try and help you decide whether the stock is or is not for you. So the stock right now is trading at $22.97, almost $30, and looking at this 5-year chart, you can see the growth is about, like a handful of percentage, like 3 or 4%. It's really not a great growth for just overall capital. And basically, so how the stock works, if you wanted me to put it like a caveman type of way, stock up when market's scared, so this stock just works on covered calls. So as everyone has less faith in the market and it gets more volatile, and everything is selling off, then this stock actually can profit off of that. And obviously when the stock market is rising, it's not going to completely rise with it. It's just about going to stay the same. So that's kind of how this works in a very simple way. So who is this stock actually for? It's not going to be for your older group of investors. So I'm talking 65 years old maybe. If you're looking to put all your life savings in a stock and just collect those dividends, I don't think this is for you, just because it's not going to be growing at all like your average dividend stock. So I think your money is best put somewhere else. But if you're part of that younger group that, you are maybe like 30, 40, looking to dump your money into a stock and have its dividends compound over time, I think this is definitely for you. And that is because, of that 11% dividend that pays out monthly, it gives it a lot of time to grow. So let me show you an example of that right now. So again, QYLD has paid its dividends for 6 years running. Considering this is a, 8-year-old stock, I think that's really good. So I think that will also continue. So an example, so if you put $10,000 into QYLD and every month you decided to put $200 more in it, let's say the current price right now is $30-ish, and the expected increase, let's say annually is 2%, something really small, and you just want to invest for 10 years, a decade. Right now the current dividend yield is 11.10%, which is phenomenal, and the expected dividend growth rate, I just put 15% because that is the average. And we are going to want to set up a DRIP, which is a dividend reinvestment plan, just so that every month those dividends buy more shares of QYLD. So every month you get a bigger dividend. And then if we put the taxable rate of 22% on this stock, which is the average tax rate. So here's how that would actually turn out. So your starting balance of $10,000 over 10 years would turn into $94,000. And I think that is phenomenal. And if you go to the 10th year and look at the dividends, you'll actually be able to see that you'll be receiving $20,000 in dividends just from QYLD on your 10th year. And I think that is phenomenal over 10 years. So just you'll receive $20,000 annually in dividends. Your original $10,000 investment with a $200 monthly contribution will actually turn into $100,000, and that's only in 10 years, in a decade's time. Obviously, that will grow exponentially the longer you have it. So just that snowball effect, the more and more years you let this sit and compound, the larger it's going to be. So you let this sit for 20, 30, 40 years, that'll just turn into hundreds of thousands, if not millions of dollars, which is fantastic. And I think it is very doable. Like, it's very realistically doable. And so I do want to put my money where my mouth is. This is my my portfolio right here, my main dividend portfolio. And as you can see, I have a lot of stuff here, but QYLD is in my holdings. I have 82 shares, and it's almost about $2,000. And what I want to do, probably by the end of the year, I do want to have that up to about $10,000, just so we can start sitting and like compounding constantly over time. I don't want to outweigh my portfolio, but I do want a lot more money in this stock, because currently right now I'm 18 years old, and I want this to sit in the market for maybe 10, 20, 25 years until I choose to retire. And I think this is a fantastic stock for that. So I don't think if you're 65 years old, this is not a stock to collect those dividends every month. But if you are, a younger investor, 20, 30, 40, and you're going to let this sit for 20 to 30 years, this is definitely what you want to do for compounding. I think it is a fantastic choice. Other than that, that's all I have to say today. I hope this helped you make up your mind. Like, maybe if you finally want to invest in QYLD, or maybe if you want to pull back, hopefully this helped you make up your mind. Other than that, just hit subscribe and hit the like button. Thank you very much.